NBC TV18 exclusive now. Lata Venkatesh caught up with PS Jayakumar, the MD and CEO of Bank of Baroda, and began by asking him about the monetary policy and if he expects a rate cut on Wednesday. Listen in.
First, the budget and the contained fiscal deficit is a positive thing. Inflation being lower is a positive thing. So the expectation of rate cut is there, but I would say banks have transmitted the cost of fund reduction at this point of time, and therefore further avenue for further reduction in interest rate seems less likely. We'll wait for the monetary policy.
Okay. Would you wait for the monetary policy, or would you wait to know how much of your own extra deposits will stay? In any case, what is your expectation? How much will stay, you think?
Difficult to say, but you're right. It's going to depend upon how much of those deposits stay. It also is another variable, should we reduce the savings deposit rate by themselves? So a couple of questions around that we'll wait for. We need some more data for that to flow out.
Okay. So you do think that there is scope for deposits to fall further because you are saddled with cash?
I think some of the deposits are returning from the system. By no means we've reached a point where we could say the stability. Let's wait and watch. And the expectation varies from 40% of the money being retained to 70% of the money being retained. But I'm more kind of halfway there, as what I think would be there. So let's wait for it.
Okay, but if there is a cut, for instance, from the Reserve Bank, you think banks will immediately not pass it on? You would rather wait to see the stability of deposits?
I think at this point of time, I think we have more than fairly priced. If the monetary policy also results concomitantly in the reduction of cost of funds, surely yes. So we have to wait and watch that.
Okay. What is the sense you're getting of the market? Even the market stopped at 6.1, the 10-year, and then it rebounded all the way to 6.4. Will bonds also bypass a rate cut if it came? You won't see too much of a movement in the 10-year?
I think a couple of other things. The externalities also has to be kept in mind. The potential rising US dollar interest rate. All of that is a factor, FI funds and the way they move. So the supply side is affected by a number of things. So I think at this point of time it's kind of range bound. Probably there are no significant downside risks, but we are where we are. Okay. And I think it's probably going to be there for some time.
Okay. Well, a word more on the demonetization and the munificence that RBI granted, forbearance if you please, that you don't have to, classify as NPAs loans under 1 crore even if they are not returned. What is the sense you are getting, not for your bank at all, but for the industry as a whole? Do you think it will leave behind some debris of bad loans?
I think, see, the forbearance and, are not uncommon in unusual circumstances, yes. Earthquake, any kind of other kind of war, intermittent, any of these things. But you also, in a consumer behavior sense, also, asking for 11 installments instead of 12, extending the loan, I don't think is necessarily a bad thing. But I don't have data to say this is how it will behave. But I would think as long as the currency circulation starts, as long as the economic activity revives, I don't see why the behavior should be any different than what it was before. So on the balance, yeah, optimistic.
Okay, that's the word.